my team, we're kind of just flat. Really, we were we were looking at going long silver, but similar thing to gold, we're currently just watching it run without us. We were actually just waiting to see if we could get some sort of significant pullback or relevant pullback off these highs, which so far it doesn't look like it's happening. So yeah, we're pretty flat. So yeah, it's a case currently of just sort of building out trade ideas and seeing what we can really do for the rest of the year. And yeah, that's about it.
I like it. Well, James, appreciate you coming on the stream. I wanted to hang out with you today because we had, of course, services PMIs, but also I always enjoy the conversation. So for everybody who enjoyed listening to James's take on stuff, here's some information for you. You can join the Elite Traders Telegram channel and ours. We have 2 great Telegram channels, both free value. James, we got to do some collabs, Telegram to Telegram. That would be fun. Like I could share some of your stuff. You could share some of our stuff, and we could.
Yeah, I actually just sent out a economics cheat sheet, so I could send that over so you could rebrand it if you'd like. It just goes over the basic stuff that people learning can use to get a basic idea of what's going on.
I love that. We could even do something where we forward each other's messages in our Telegrams. That would be awesome.
Yeah.
Share some value across the 2 communities. But make sure, check out Forex James on his YouTube channel, the Telegram, all that good stuff. And James, we're going to throw it off to Chris Pulver. He's up next. Thank you for joining me, and we'll see you next time.
Cool. Thanks, Nick. Thanks, Nick. Thanks, chat. See you later. Have a good one.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What is happening, everybody? Happy Wednesday. Welcome back to another segment. Watching a couple things here on the indexes. So SPX, SPY, we had our gap from Friday to Monday. We've spent the last 2 days working our way back to it. Today is Wednesday. We've gapped lower. I am curious to see, this is a down week. This started out with a down week, all thanks to that open, all thanks to this open. I'm wondering if all this market is doing is pulling right back to that gap level and then breaking this structure. And today is a kind of a make or break day. If the bears are going to get the upper hand today, I could see this by Friday, maybe coming back down to revisit lows for the week. That's also a pretty big inefficiency candle that I wouldn't be surprised if the market gets there. Job-wise, we'd probably have to disappoint on non-farm if this is going to take all the way until Friday. Otherwise, we had services PMI that came in a little bit softer today. Forecast in the 54s came in 52 from what I saw. 54.2 came in 52.8. Is that enough to move the market a ton today? Probably not. But we also had some disappointment in the earnings land this morning. This would have been aftermarket yesterday. So we've got AMD. AMD down a little bit. So we had a close at 119 down to 107. I'm trying to see if AMD will get down to, let's go I need to see if price gets down below 104 or close to it before I can take some profit on my earnings play. Google down to 188, and Google had a miss in revenue. I'm not sure if I want to jump right into this right now or what the Google situation looks like. So 25.4 IV rank. I do have some income trades out here for March, May, and even further, which is way out of the way. I wouldn't mind owning Google at any of those spots if I was assigned. Otherwise, I'm going to look to see maybe this gap fill on Google. So if we come back into this area here, a gap fill to the potential bounce off the 200 moving average, then I will probably reestablish some positions. So one trade I'm looking at right now on Google would be, let me see how much this is going to cost me. If I bought it wouldn't be quite a leap, but it'd be close to that if I did like a December, January. Probably go out to January. And It's pretty expensive. I might be better off doing this on Tesla. I think Tesla might be a better structure. Just Google's probably fine, but Tesla probably has more growth potential. Trying to think. Anyway, let me look at this trade. If I did like a 160, that's a lot of premium I got to pay on this thing, man. Now on the sell side, I might be able to get a little bit more. So if I did like a 70 to 80 delta, that puts me up with a break even around 1. Gross. Like these are pretty pricey. So 165 or 160, that puts my break even up to 202.90. This puts me up to, what is that? 205, 202. Let me see what this one looks like. So if I bought a call out to January of 2026, it's going to cost me 43. So I've got a strike price at 160, 43.70. My break even's 203. Now, 203 would basically be like, if I'm buying this, I need Google to get back to all-time highs for this to get called away. So what I could do on this is sell against it. Let's go to the 21st. If I sell against it a 205 or even a 205 at least gives you some profit. That's my break even. If I sell a 205 for 45 cents, I don't know if I love this trade at all. I have to put up $4,300. If I put up $4,200 to make $175, that kind of seems like a terrible investment to me. So 4,240. So 175 divided by 4,240. I'd make 4% on the trade, but we'd have to get back to all-time highs. I kind of like it better for Tesla, to be honest. I will say this on Google. If we come back down to the 200 moving average or the 144, or come back and fill this gap, I will probably look at like a 1-1-1 trade. I might look at that right now. I just want to see what the prices are at. So maybe like a 160 zone. Let's have a quick peek. So if I went out to April or May, let's go April. What type of premium could I get? Probably not a bunch, but if I were to buy, sell, so the 165, the 160, the 155, 80 cents with a profit trap, potentially owning some shares, only requires about $1,600 in buying power. That's not bad. If I took on the shares, I would be okay to take on the shares and repair it for a couple of bucks. Probability assignment is pretty light. This would be like maybe a 10% chance of assignment, 90% chance of profit. If I move these all down, 56 cents, probability of profit goes up, still have a profit trap. Let me go up one strike. That one's not bad. Still, the probability of profit goes down slightly. All right, which one pays better? Either a 1-1-1 or a ratio spread. Let's find out. 40 cents credit on that one with a 95% chance of profit and a profit trap. Or let me look at a 150 ratio spread. 70 cents on the ratio spread. Nah, I'd rather spread that out. So 42 cents. Which do I like more? It's only out. I mean, it's out 100 days. That's not great. All right, I'll revisit that trade. Let me look at Tesla instead. Tesla trading at 381. I'm trying to get some dollar cost averages in on Tesla. I think this one, because we've already had a bit of a pullback and it's been like slowly grinding, I wonder, and this is what I'd like to see on Tesla, just a kind of wedge and accumulation zone. So the safest play would be wait for this area to break, and then we start getting long Tesla. But I'd almost like to say that if I'm getting in a little bit early and we're kind of establishing some 360 support somewhere in here, I still have a dollar cost average position that I'm wanting to take. Same thing here at 285. But Do I think that Tesla could get to all-time highs by the end of the year? I think that it could. Now the question is how much I'm willing to pay for it. So Tesla, if I go out to the end of the year, let's go to January 2026. I had a feeling it's going to be very expensive, and it freaking is. It's going to cost me 10 grand. I don't like that trade at all. I'm just not going to put that type of money up. That's stupid. So I was considering a diagonal spread. I mean, that's the risk of like, oh, if I'm wrong on the time, I could lose 10 grand. I'd much rather trade something like this, where maybe an April-May ratio spread looks a little bit better, or a 1-1-1. I think that's a lot better. So let me have a trade look here. Let's go to April. So I've got a February and March. Let me look at April now. I'd probably look at April and May. So where could I go? Anything at 270 or lower is acceptable. So 270, 265, 260. To me, that's a pretty good income trade. It's a really good income trade if you ask me. There's a lot of potential volatility, but if I wouldn't have any assignment risk, I mean, there's a 93% chance of profit, only about a 6% chance of assignment on this trade so far. I mean, again, roughly speaking, it's well outside the expected move for the next 71 days, and I'll get 226, let's say 225 credit on this trade. So I'm going to take this trade. Now, buy power, it's a little bit heavier on the buy power. I'm going to put this in my portfolio margin account. So that would be 1, 2, 3, 4, 5. Those accounts are going to take some Tesla. I'm going to look at this for April and for May. Generate a little bit of income. Likelihood of assignment is pretty slim. Okay. So I'm going to see if I can get this trade going for about $2.25 to $2.30. Maybe I can still get $2 and move this down even more. 201. I don't mind that trade. I'm going to try to take this trade here for at least $2. If I can't get filled at $2, and I'll bump up the strikes and try to get 220. See if I get 205 on this trade here. 205. Tesla is falling a little bit. See if I get 205. I'll accept $2 on this trade. So I'm going to buy the 265 put, sell the 260, sell the 255, and I am willing to own the shares. So I don't think I'm going to get filled at 205. I tried $2. 201. Filled at 203. Okay. That is this account. Okay, so those all got filled. Let me put this into the Pulver Alert section. That is Discord Pulver Alerts. And this will be under the stock options trade. This is going to be a new one for Tesla. Expiration is a 4/17 expiration. Buy the 265 put, sell the 260 put, sell the 255 put, collected $2.01 credit. That trade has about a 93% chance of profit and about a 5% chance of assignment, which is very low, but I'm willing to own shares. Income trade with backup plan to own, and break-even price would be, I'd be assigned at 255. So 255 minus 5 minus 2.01. I'd own shares at 247.99. Which right now, if I could own Tesla at 247.99, that would be another 34% discount, and that would be off the highs. That'd be owning the shares at 50% off from the all-time highs. I like the trade. I think that realistically, this stock is probably just going to accumulate. I might establish more of a long bias if we break this wedge or kind of accumulate out here and then start showing more signs of higher highs and higher lows. Realistically, I don't think anyone would be terribly surprised if we had like a $550 to $600 stock on Tesla. I don't think anybody would be surprised if at some point we get to $1,000 before we split again. You know, if they split, but they probably will. Okay. So anyway, that's the trade for April. Let me get that trade in my tracker here. So that's been, it's almost posted. I just have to put in a screenshot. And let me add this in. So Tesla. And the expiration is 4/17. Buy the 265 put. Sell the 260 put. Sell the 255 put. 201 credit. And the break even would be 247.99 if I'm taking any assignment, but the risk is, or the chance of assignment is pretty small. All right, that's for April. May, similar setup. 265, 260, right there. Wow, that's a lot more credit. Holy shnikes. Delta's a little bit different, but it's virtually the same trade, 89% chance of profit. I'm going to move this one down. I mean, I'm obviously wouldn't mind getting the $4. Now we're at a 90% chance of profit. 250. So 250 minus 5 minus 3.67. 241 if I had any assignment risk. It's not bad. See if I can keep over $3. 298. Okay. So pretty good probability of profit here. Similar mechanics. See if I can get this one. This one pays over $3. 327. All right, I'm gonna try to get filled for like 327 or 325 in this one. This one's just out to May. 100 days out. Let's have a look. We already had Tesla earnings. See if we get 330 on this one. 330 not filling. 328's the mid. 327. I mean, I'll probably get filled for 325 if I can't get a better fill than that. 326. 325. Come on, Tesla. Filled at 325. So that was filled at 325. Now pending, I'll go 324. Filled there. Come on, dude. 323. Gotta be kidding me, bro. 322. All right, 322. Similar trade. Tesla. This one's a May expiration, May 16th. Buy the 255. Sell the 250. Sell the 245. Pulled in 3.22 credit. Same thing applies. Willing to own. So that'd be a 245 minus 5 minus 3.22. 236. All right. I'm going to post both those in the same spot. Tesla 5.6 or 5/16 expiration. Buy the 255 put, sell the 250 put, and sell the 245 put for 322 credit. So that trade, 91% probability of profit. And we have about a 6% chance of assignment. Willing to own shares. Income trade with backup plan to own. Break-even price on those shares would be 236.78. All right. So that is now in. I think I'm gonna have a fun segment here. Let's build that out. Let's build that out on Tesla. So I'm building this out. So we're going out to April. And this is a buy, sell, sell. 255, there's a 265. So 265 on the buy side, and then the 260, and then the 255. So these are all puts. That's the trade. So yes, there's risk, but I'm willing to own the shares at a 50% discount from the all-time highs. This is the live price. So as long as price stays here, goes up a lot, goes down a little bit, goes down a decent amount. I mean, we could drop from 383 all the way down to 265 before I'm in any type of trouble. The assignment risk would come at the 250 handle. So that's what the trade looks like. All right, almost done. That trade's in. Okay, that's in the tracker. That's in the Pulver alerts. We're good. Let's work our way through some other stuff. So I like that better than Google for right now. I'm going to wait for better opportunities. Still have some dollar cost average positions in for those allocations in Google. I do have some earnings trades that I'm watching. Overnight, we had earnings on. We had AMD, Google, Snap, and Chipotle. So AMD, we're on 107. I'm going to see if this pushes a little bit lower by tomorrow. Google, we just looked at that one. If it stops right here, I mean, I suppose previous levels there, like this resistance becoming support, like maybe that's it. We just have a little bit of a pullback, but I'm looking at this gap fill. If Google has any more pressure or the indexes sell off just a smidge, then maybe Google comes down to like this 180 to 170 level, and I'll probably add more ratio spreads for something below these levels. And I'd be okay with that. Snap, right now trading at, oh, fudge. This was trading up to 1160 and it's just faded hard. So I might be taking some assignment on Snap this week. Earnings came in positive and the stock's just getting hammered right now. So, well, that's going to be interesting. So as it stands right now, I could have an assignment at the 12, 1150, 11, and 1050, which is fine. I guess we'll find out. So let me set a chart alarm here at 10. So $10 would be all 4 puts assigned. So the way this trade works is I've got 309 by 4. So I've got 77 cents of credit collected between the ownership. If I get assigned on all levels, so 12 plus 1150 plus 11 plus 1050 divided by 4, 1125 minus 77 cents. I'd have a break even of 1048 if assigned. So I'd have break even at 1048 if assigned, if I'm assigned at all levels. Otherwise, I'll recalculate. And if I don't get assigned at the 1050 level, then I still have shares at 12, 1150, and 11. I'll calculate the break even there. But the point is, if I'm assigned on these shares, it would be this Friday over the weekend. And then the first thing I do next week is look at a repair trade where for having, 200 shares, 300 shares, even up to 400 shares, if I make $1, it might take me a week or two to sell some covered calls. But if I make $1, I'll flip this from what I wanted to be like $300 of credit to flip it for a little repair trade of hopefully, $400 of profit, something like that. So I'll keep an eye on that one. Chipotle gapped lower, pushing back up. I'm watching this one. This expiration I think is out to, I hope this is out to next week, but I think it's out to tomorrow. Let me double check that one. Yep, it's out to tomorrow. So we need to see some Chipotle freaking move. I bought the 59 by 64. That's a bulk call spread. And then I did a 57 by 52 bear put spread, and price is right in the middle. So unfortunately, that's like worst case scenarios, price is in the middle. I could take a loss on it right now and not worry about it, but I'm going to see if there's any follow through one way or the other. If there's follow through to the upside, maybe there's a little bit of value here. Maybe we get up to like $60. I could walk away with $1 instead of 264. We'll see. Any other earnings plays? I think for this morning, we had Uber earnings this morning, and we're down to 64. I have a trade on Uber. The 68, the 67 by 60 on the put side. 67 by 60 on the put side. So if Uber drops a little bit, that's fine. I want to see if it gets down to like 61 or $60 for some earnings profits there. Walt Disney didn't really do much. Disney is up to down. That's kind of what Apple did last week too. They popped up on earnings and then they dropped. Earnings was a beat. So EPS and revenue was fine on Disney, but the stock is dropping. Index wise, I mean, price hasn't really done much today at all. So AI payoff concerns, duh. I mean, we only said that for like 3 months, that is this AI CapEx spending going to work or not? We don't know. To be determined. Probably something you need to be bullish on longer term, but right now, who knows? Qualcomm has, it's after, never mind, that's after market today. All right, and then Amazon. I've got earnings plays on those. Amazon has earnings tomorrow, so Thursday after close. Are we going to all-time highs? Are we going to break down? I don't know. I did a roll yesterday on Amazon. Actually, now that I reminded myself, I'm going to look at JD again today, trading at $40. I might look at a roll on JD with the trade through earnings or not. I might just get this thing repaired. So JD gapped lower. I still have a covered call at 39. I don't really have to do anything. I might just take profit. So 500 shares. I mean, I wouldn't mind getting the buying power back. If I have 500 shares with a break even at like 36, so 36 times 500, I mean, that's $18,000 in buying power that I wouldn't mind having back. I can apply that to more ratio spreads and less ownership stuff. So let me see if the roll is worthwhile. Earnings on this one, I believe March 5th, and the 7th would be the expiration. So if I want to go through earnings and take that chance, I hopefully get paid to do that, but let's find out. So if I go 39 by 30, I did this yesterday, but I didn't get filled on the roll. So if I go out through earnings, I can get another 55 cents to 60 cents. I would not accept less than 50 cents if I'm going to roll this thing. So I'm going out through earnings, still keep it at $39. If it goes higher, okay, fine. If it goes lower, I still lower the cost basis by, 50 cents or so. Let me see if I can get 55 cents in this roll. So I'm going to roll this out a week, try to grab another 50 cents, 55 cents credit. Son of a bee. All right, I'm willing to take this down to like 50 cents. Hopefully not less than that. If I don't get filled at 50, then I'm probably not taking this trade. So 52. You know what? Fudge it. I'm just going to get it called away. If it stays above 39, I'm going to get it called away, not even deal with earnings, and it's fine. Okay, so I'm not going to roll it. Did Tesla, Google, I'm going to wait a little bit longer. Intel, I bought some shares on this last week. So I did a 1940. I think I bought it at 1940. 1940 allocation, and same thing here at 1350 if needed. All right, let's go through the top down. Here we go. SPY. Lots of sideways right in the middle. Equal weight. still deciding, can we have equal weight improve, or is it going to be, we've talked about this broadening out idea that, the Mag 7's performing so well, maybe it's time for the lesser performing stocks to catch up. Well, that's one way to broaden out. The other way to broaden out is that everything falls. But Mag 7 falls faster because it's been the best performing asset, class or sector, whatever you want to call it, niche. But if Mag 7 falls, then the other stocks that are already beat up don't fall as badly. That's also a way that the market broadens out. So if the market drops, we could have a broadening out, but it's obviously not going to feel very good when everything's red. So anyway, equal weight, I'm watching this closely. We did find the 200 moving average, though, on the equal weighted. And this is what I'm kind of waiting for to see if this happens on the large cap, market cap weighted. So here's our bar count on the red line. That's my 200 EMA. Here's my bar count on the SPY. Goes all the way back to November 2023. This is why I'm not super bullish on the markets right now, because I think that this area is still going to be very indecisive until this level gets hit, and that's going to be hopefully a buying opportunity. Now, if we have like a nasty volatility event, we could come back into that 200 moving average and possibly deeper, but I would say that would be the aggressive kind of buy on the dip, like we did back in April, May, like we did back in August, September. To me, this would probably be the best opportunity of 2025, is if the market came down to this area and bounced hard right below this 200 moving average and then rip back up. I think that's what gets us back to highs and hopefully higher for the year. I don't know if that's going to happen, but that is essentially why I'm keeping 40 to 45% of my portfolio in cash, because that would be where I'm going to deploy most of that. Okay. But I don't know. That's my thoughts. As far as the projection and forecast for 2025, I will wait to see if I get that opportunity. And if that's the case, then that's most likely where I'm going to be the happiest as far as deploying some capital. Okay. Nasdaq. Also, this one's a little more volatile because we did hit the bar count during that August drop, but similar situation where if we come down to this 144 200 moving average, maybe a bit deeper into this 10 to 15% dip area, same type of thing. We go through it, we close above it, and that's what I think is probably one of the better opportunities for 2025. And so the longer and more indecisive this stays, I'm totally fine with that. I'm just not putting big positions in. You can see the style of trades that I'm doing. I'm staying out of the way, give myself this wide net for error, and still collecting some income. And it adds up nicely over the next 30, 60, 90 days. Okay. AMD, what about it? It's gapping lower. I'd like to see it push lower. I'd like it to be back below 104 by the end of the week. So we're trading at 107. I want it to get back down to 104. That's it. We've got some pressure here. AMD, I'm sure that it's just begging the question of how is it performing, right? They beat earnings on top and bottom forecast, but stock gapped lower. So consensus wise, it's is there a little bit of questioning the CapEx spending or just the performance overall? Is NVIDIA still sucking right now? Kinda. NVIDIA's up a little bit to 122. AMD and Micron and whatever 10 semiconductor stocks you trade, or SMH or SOXX, all those stocks, honestly, are probably contingent on NVIDIA going back up and to fill a gap. If this fills the gap, it's probably dragging the entire semiconductor sector with it, and likely those peripheral stocks go with it too. So I think that's the issue, is they're just not going to perform all by themselves. Earnings good, earnings bad. It's what is NVIDIA doing? That's probably the reality right now. Tesla, we already did. Berkshire Hathaway, good with that one. Bonds, let's see. TLT, I'm long. Ooh, what's up, TLT? 10-year. What's up, 10-year yield dropping a little bit more? Okay. I'm happy to see that. Hopefully this translates into, you never know, but it'd be nice to see this translate into from about a 7% 10-year, the 10-year yield dropping about 37 basis points. I'd love to see that translate into a 30-year mortgage that was up to 7%, now dropping hopefully 6.65 or so. It's very possible, but I need to see this level stay. So, all right, 10 years dropping, yields. This is good. Bonds are up, yields are down. I'm liking that. This hasn't been adjusted yet, but there's your 30-year. I would like to think that if this thing can go up by about 95 basis points, going back to the 10-year yield. Okay, that was up 121 basis points. So it's obviously not going to be like point for point, but still, any help off that that mortgage would be good. I mean, supply is trying to catch up. The problem is we have a frozen housing market because prices are still at crazy highs. New houses are probably selling more than used houses right now or existing homes right now, and interest rates are excessively high. And I mean, it's not necessarily going to break the market. Why? Because like 60 to 70% of all mortgages in the US are sitting at like sub 5%. Because of COVID, because of the last, 15 years of buying a home, most mortgage rates are under 5%. But it's the new homes, it's the new home buyers, it's the people that want to be adding, or Airbnb flippers or whatever. Anybody in that space right now is just begging for lower interest rates. So we'll see if we get them. All right, China, to have a quick peek. HSI is down. Alibaba is fine. I'm happy to let these things run, hopefully with no with no like cap. I don't really want to cap the upside. Alibaba, I did a roll up to $100 out to April. So we'll find out if there's more upside potential on Baidu. Baba, I just have some dollar cost allocations in. There's a couple of buy levels. FXI, I'm waiting. I'm probably out of this one for now. K-Web's fine. JD, like I said, I can't get the fill on the roll, so I'm not going to roll it. I'm just going to try to get this one called away before earnings. Schwab dividend, fine. Schwab growth, chop. I'm in both of those. And then Costco, fresh highs in the day. Walmart, fresh highs in the day. Amazon, recently fresh highs with earnings on Thursday. Nike, hanging in there. Home Depot, Lowe's, hanging in there. MasterCard, really choppy after earnings. Choppy after earnings. Choppy after earnings. Johnson & Johnson, off the lows. I got a 140 call. Progressive, hanging in there just fine. CB, hanging in there just fine. Palantir, somebody asked me about Palantir today. If anybody's long Palantir, I would be protecting profit. If I own shares of Palantir, when this thing gapped up by another $20, I would have a stop loss in at like $97, $98, $99, and that's it. Like I'm over like this stock performing the way that it's been, and I'm not chasing this thing. I still have ratio spreads. I like to see a pullback. I like to see a reality check. The nice thing is it's been such a generous stock for the last year. It is literally the best performing stock of 2024, and continues to have a great start to this year with that huge gap higher. It's up another 20%. So I know Palantir is great, and I just think I love a pullback. A pullback would be awesome. I don't know if we're going to get one, but I can't look at this stock and say, yeah, this looks like a good buy right now. So if anybody's long, my opinion is I'm taking profit. I'm moving stop losses. I'm taking profit. I'm trapping this thing. And I'm still looking for option trades to participate for income, which I have in here. I've got April and May. That's fine. If we have a pullback, I'll probably add some more. Carvana, leaving that alone. Redfin, Zillow. Zillow's been a little bit better. Sector-wise, anything stands out sector-wise. XLC is good. This is one of the sectors I am participating in into March. XLY waiting. XLP. This is consumer staples. I'm going to see if we get deeper pullbacks in this one. Energy. Got some puts on this one. We're trading at 90. I've got 83, 82, 81 puts. XLF. Maybe some chop in here. If we go something like that in XLF, which is the financial sector, maybe some indecision. But I think financials would be pretty steady and stable this year. I just want to see if we get some better levels to maybe add some puts or some trades on it. XLV, this is healthcare, fine. XLI, probably a bunch of indecision highs and lows. XLB, materials, got smashed during December, came back and kind of put up a good fight. We're kind of right in the middle of all this chop, right? So this area, I mean, I'd say it's like the halfway point if we have a bigger range. My only concern would be we go high, low, lower, high, lower, low. I'm way more attracted to this low here to establish some positions. But if we get back above the 200 moving average, just pretty common sense stuff here. If we get above the 200 moving average, that could be our low, and we do try to come back and revisit highs. Could be a broadening pattern as well. But I'll watch. I'm not in XLB, but I'm trying to figure out where I can trade it. Our XLRE, we'll see. Housing market's a bit frozen. Maybe some upside potential. Maybe. Probably not my favorite sector, though. XLK, everyone's favorite tech. I would expect some volatility and some indecision. Something like that. Maybe in interim, like a little bit tighter. Something like that. But not establishing any crazy positions. And also, I think tech might be an underperformer this year compared to other sectors. So XLU, fine. But I don't know. I'll wait. That's sector stuff. All right, let's go dollar index, gold, silver, Bitcoin, everyone's favorite. Dollar index is continuing to drop from that gap on Sunday, which I'm good with. I said if the dollar drops, expect the yields to go with it. That's good. That's a nice correlation we've seen this week. So DXY is down, 10-year yield is down. Oil trading at 71.74. I'm looking at this. I've got an iron condor on CL. So if we're above 65 but below 81.50, I'm looking for some decent profit on that. I think I've got this out to March. And then gold. Holy fudge, man. Another big freaking day in gold. Wow. Okay. Gold at 28.79. I mean, I'm in it. I've got some exposure. Part of the reason I'm profitable today is probably a lot of gold, but I wish I had more, just like everybody does, right? So, yeah, I mean, you get a breakout, you don't get a pullback, you don't get a pause, you don't get a retest, you get nothing. It's just breaking the freaking highs and going. So what do you do with that? If you're in, you're enjoying the run. If you're wanting to add to it, I'm not buying all-time highs. I'm just going to wait. I keep saying that. I'm going to keep saying it. I don't know what would have to turn the corner for gold to all of a sudden come back and retest these levels, or if gold just starts to look, a little bit capitulating, a little bit bubblicious. I don't know. I'm not saying there's a gold bubble. That'd be kind of ridiculous, but I'm sure one person that's celebrating is Peter Schiff because he finally doesn't feel like an idiot watching Bitcoin outperform gold. So gold's doing well. But I mean, I've got about a 5% allocation to gold, 5% silver, 5% Bitcoin, and I'm just going to wait. Bitcoin's at 98. We haven't cracked the 109 handle recently. We're not really going down below 90 or 80. Gold, meanwhile, is just making fresh highs. Silver, getting above my 32, 35 level. That's good. Big measure move for me is 35.88, which is hopefully another 10% higher. And that's like the minimum. I'd still like to see silver perform way more than that and get into open space where we ultimately get up to like $48. So if I can, I've got trades, and I think I've got my covered calls on SLV. Let me double check here. So SLV. So I have the shares. They're covered halfway point of the year into June for $34. So that's not bad. My break even is like $25 or $26. Last year, last year SLV and GLD were big parts of my portfolio, up like, 30, 40 grand each. I think silver was actually a bigger position. Bitcoin did well for me last year. But I'm still going to run with it. So I have this 28 by 27 bull. It's a bull put spread. I have a collar trade just in case. Likely not going to have to need it. Oh, never mind. That's a long call. I see what's going on here. Okay, so I have this is a diagonal spread. The 15 by 34 is a diagonal spread. I have my shares that are currently uncovered. And let me see if I can get anything for like a 30 to 60 day call. I don't want the shares called away. I mean, if I go to SLV, my measured move is $33. So would I consider covering? That's a diagonal spread. I don't think it's going to get called away unless price is above 34 and this becomes in the money. But if I put in a cover call on the 600 shares, what I can at least do is grab some credit, collect some premium, don't get the shares called away. But let me look at what the option chain looks like. So if I go out like 44 days, because I don't think going out like a week or two is going to help. Yeah, I'm getting nothing for that premium at a level that I'm interested in letting it go. Yeah, I don't, because what happens when you start getting aggressive, like selling weekly covered calls, if you have a price appreciation week, it's just so easy for your calls to get called away. And then you have to roll it, potentially roll it for a debit. And I hate doing that. So I'm going to go out a little bit farther. Look at like the March call or the March call. 34 is not bad. 35. Let me go out another month here to April. And $35 isn't awful. So that gives me another $180 of income on this trade. Someone in the chat would probably still sell, saying gold sells are building up. Yeah, maybe, if you're dumb. I mean, I don't know why. It's like the most obvious bull market right now. I'm just waiting for a pullback. I might not get it all. I might not add any more exposure to gold outside of riding the 5% that I have and letting it run. You know, but I will say if we stretch up to $3,000 and it starts to get crazy overbought with a lot of divergence, then I'm probably looking for a technical top and I want to be protected as a profit. All right, so if I did an April 17, 35, that's a 15 delta. I can still get 30 cents for that. I'm going to take this trade here. 35 is above my first measured move. I still get 30 cents on the trade. I have 600 shares. So 600 shares at 31 cents. That is the bid price that should get filled. Filled at 31 cents. Very good. Okay, SLV, this one has 300 shares. So trade 35 for 3 contracts. Okay. This one has 300 shares. 35 for 300 shares. Okay. 300 shares. 35, 300 shares. Here we go. 200 shares. I'm just getting these all covered, lowering the cost basis a little bit out to April. So 35, 200 shares, 9072. Okay. This one is the diagonal spread. That account came in late. This one is diagonal spread. This one is shares. Okay. So this one will add another 300 shares, 35, 300 shares. Okay, I think that might be it. So 30 to 31 cents for the covered call. This one bought the shares at 27. Already have it covered at 35 and a collar at 21. Okay, good. I like that trade. This one here bought the shares, collar position out to May. That's fine. This one here, no exposure. All right, let me get that added in to my tracker. SLV, 2778 break even. That's the diagonal spread. Ownership 2579 is my break even, and I'm adding in covered call on own shares. April 17 expiration, $35 sell call for 30 cents credit. Break even is now 25.49. So if it gets called away, 25.49 minus 35 gets called away for 951. On the minimum side, 2853 profit, or double that to 5,700 on the account that has 600 shares. So overall, that's a pretty good chunk of it gets called away. Unlikely to get called away right now. That is a 14 delta. So we'd have to have a pretty decent price appreciation move. It's well outside the expected range for April, according to just the current option strikes. So that's fine. I'm looking at price appreciation. If it does get aggressive, then so be it. Okay, cool. So I got filled on all of those for 31, 31, 30, 30, 30, and 30. Right now, that's interesting is showing 25 cents. So actually pretty happy with that fill, I suppose. So that would give me how much per share? 24 or 25.49 minus 35 be 9.51 a share. Okay, that's added and adjusted. Got it. That's gold and silver. Enjoy it. I still like silver technically a lot. I still like gold technically. I'm just waiting for a pullback. Here's what I'll say on gold. Let me bring up another workspace just to get a snapshot of some potential momentum or divergence. Would be take my gold position and take a look on the daily and weekly time frame. This is probably not a good look for gold. Overbought conditions with divergence. Okay, here is gold. Now I get it. We can stay higher for longer. We can sit here and hug this relative strength, which is showing overbought conditions. But my point is we're going higher with no momentum. We're going higher with bearish divergence. Okay, this doesn't mean a top in gold. It just means that a correction or something is more likely than not, which is why I'm not going to buy these highs. So any dip, any pullback, I'm all over it. Until then, I will patiently wait. So what do I need? Well, I want to see a pullback into any of these moving averages, any of them. Okay, if gold is really that aggressively bid, then we're going to see this pullback to maybe the 21 moving average and then go higher. Maybe the 50 moving average and go higher. That's it. Doesn't have to take out lows, can still stay in an uptrend, can still make higher highs and higher lows. But can you see why I can't buy these highs? Maybe you can't, but I can. All right, Bitcoin. Lots of chop. Fine with that. I'm going to see if Bitcoin comes back to like 90K. Same thing on the peripherals here. Waiting. Yep, just waiting. MicroStrategy holding at 341. Earnings on MicroStrategy should be today. Yep, aftermarket today. This will be one to watch and check. Speaking of, curious on this one, what if I can price this one out? MicroStrategy. Let's have a look at some earnings opportunities here. We have an average of around 8%. So we have 9, 10, 9, 9, 7, 6, 7, 9, 9, 8. I'm going to go 8%. Stock is trading at 341.33, $27 move. I don't think the option chain is going to be that great. So $27 move on 250 spreads. I don't even like that. 27. That's somewhat conservative, but let's see. Well, before I even consider placing trade, how many times do we at least get to 8%? That's what I want to find out. How many times do we get to 8%? Because if it's very little, then it's not worth taking a trade. We get there day 5. That finally hit. That one got there day 5. This one gets there day 1. This one gets there day 3. This one gets there day doesn't. Day 8, I guess. I'm not going to count that one. This one gets there day 3. This one gets there. It doesn't. This one gets there day 8. I'm not going to count that. This one gets there day. Geez, oh Pete's 33% after day 8. And this one gets there. So, I mean, it's pretty reasonable to think that we've got 1, 2, 3, 4, 5, 6 out of 10. So what's crazy is 10 out of 10 times it gets there within 8 days. So if you can see the 8 to 13 days, which tells me if I put on a trade on MicroStrategy, that I go out 8 to 13 days. So let me look at the options chain here. So I can go out either 9 to 16 days. If I just go out to that monthly expiration and trade what is hopefully an inexpensive move, about $25, we're trading at 340. I'm just going to round it. So 340. Now you can see that I've got $5 strikes, which I don't love. But if I went to like 360 or 365, okay, so it would cost me $1.35 to make 365 on this trade. And on the downside, if I went down about $25, that'd be a 315. So a 315 to 310. So it would cost me $2.90 debit. And if I win one, I walk away with over $5. So all I need price to do is get above 370 or below 310 within the next, 16 days. It's an earnings play. It's a post earnings play. I think there's enough volatility. Obviously, if it doesn't go anywhere, then I take risk on the trade. If price goes well beyond 370, then I can take partial profit here. If it goes well below the 310, I can take partial profit here. So I don't think it's a bad trade, and so I'm going to take this trade. So hopefully I can get filled. I don't want to get that one. Let me see if I can get filled. Fudge you. 341. I don't really want to go one more strike up because they're $5 strikes. I'd like a little bit more precision through that monthly expiration. Let me see if it's any better if I go out one more week. Nope, same. If I go to the 14th, now it's 250 apart. I can be a little bit more precise here and lower the risk. The only issue is now it's only 9 days out, and that 8-day mark to 13-day mark, it's like you got a lot of follow through that like 8 to 13 days out. So I want to give myself enough time. I think the 21st is a better trade. So 360. That's not awful. Okay, that's only having to go up $20. So if price moves 25, which I'm calculating about $27 a movement, that should be a no-brainer. And let me check this one. So it's 360, 365, and a 315 by 310. Okay, I think I'm going to take this trade. So 360 by 365. So I'm paying $3 to make $1.80. It's a little bit more risk than what I want as far as if I'm dead wrong, right? If I'm dead wrong, then I'm risking about $3 on the trade. So if I go one strike higher, it's cheaper, but not that much cheaper. So I'm gonna stick to the mechanics of trying to get like a $20 move. All right, I'm gonna take this trade. So let's see if I can get like 320. I'm gonna try to move this up in increments of 10 cents. I'm gonna go like 3 to 310 to 320. See if I can take this trade. $3 not filling. 310. 320. $330. All right, 335. Now the mid price shows 312. I've got a pending at 330. It's not filling yet. 335. Come on. All right, it's got filled with 335. So this one is going to be in with an expiration of 221. Okay, so 221 expiration. And I am buying the 360 call, selling the 365 call, buying the 315 put, and selling the 310 put. So $3.35 debit with a max profit of $5 if price is one side or the other. Now, because I'm going out to the 21st, I'm going to give this one time. But if price is greater than 365, I can keep $5 there. If it's less than 315, oh yeah, let me change that. Less than 315, then I can keep my $5 here. So if I can make $5 on one side, lose about $1.50 on the other side, I walk away with $3.50 less the cost of the one trade. So I'm able to get like $150 to $175 net on a contract if all I do is see price above or below the expected earnings move within that like 16-day window. So this is a 320 by 315. All right. 320 by 315, 360 by 365. That's a trade on MSTR. So I'm going to add that one in. New trade, MSTR, 221 expiration. Buy the 360 call, sell the 365 call, buy the 320 put, sell the 315 put, 3.35 debit, $5 max credit if price is greater than 365 or less than 315 by expiration. I will likely protect, close if I see a 4.35 debit or credit rather, or higher. So if we get a decent move, and I could get this early on, I don't have to wait all the way to the 21st. I'm going to look to see if I can close it for a 4.35 credit or better. Okay. So pretty straightforward trade. I would hope there's some decent volatility on MicroStrategy just due to it trading a lot like, try this chart here, I guess. Trading a lot like Bitcoin. So let's go to the day, mark my levels. Ugh, this chart is noisy. So I need it to be basically bigger than 365. So 365 is here, or 320, 315 here, there. So I want it to stay out of this yellow box. So greater than 365 or less than 315. And there's a trade. Okie dokie. All right, I think that will do it for me today. MSTR posted in the Pulver alerts. And any other questions? Just my thoughts on NVIDIA. I saw the question pop up. So NVIDIA is probably going to be responsible for any good that happens with semiconductors. Anything good in semiconductors probably dragged up by NVIDIA. I like NVIDIA where it is technically. We're sitting at a 200 moving average. We have a yearly pivot around 111 or 112. We have earnings coming up at the end of the month, and I would imagine earnings are probably going to be okay. Holding this level, gap fill looks like a lot of potential. I think earnings is fine. Through earnings, through the month of February and March, I'm looking for this to be a trade that fills the gap. So I'm bullish on NVIDIA right now. I have a trade that's collared. It gets it called away at like 130 or 140. I think it's 130 right now. Let me double check that. NVIDIA is here. So have the shares. That is a trade through earnings. That's a debit spread. Here's my 135. Okay, there it is. So the 135 by 110. That is my collar trade. So if I get it called away, get it called away at 135. My break even is down in the 120s, I think. Let me verify that. 120.58 is my break even. So I get it called away. It's 14, 15 bucks a share. I'm okay with that. Okay, I'll let you go for today. Happy Wednesday, and we'll come back and do it again later. So see you soon. Thanks. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.